Gold has shattered records, trading at $3,334 per ounce in 2025. But is this the peak or just the beginning? Today, we explore why gold has reached these historic highs, what could drive prices over the next year, and what alternative investments you should consider alongside gold. Hi, welcome back to Gold and Shadow, where we break down global finance, investing, and economic risks. Gold has always been the ultimate safe haven, but the current price surge has surprised even seasoned investors. With central banks buying aggressively, rate cuts on the horizon, and geopolitical tensions escalating, should you continue adding gold to your portfolio, or are there better opportunities now? Gold's rally to $3,034 per ounce is driven by 1. Persistent geopolitical risks. Conflicts in the Middle East, South China Sea tensions, and political instability in the US have driven investors towards safe haven assets. 2. Aggressive central bank buying. Countries like China, India, and Russia continue to reduce reliance on the US dollar, shifting reserves into gold. 3. Interest rate cuts. The Federal Reserve and ECB have begun rate cuts to support slowing economies, weakening the US dollar and making gold more attractive. 4. Inflation concerns. Despite lower headline inflation, persistent structural inflation and fears of currency devaluation have driven demand for gold as a store of value. 5. Weakened trust in fiat currencies. Ongoing debt concerns, especially the US crossing $35 trillion in debt, have led investors to seek non-fiat stores of value. Gold's current price reflects a convergence of fear, strategic diversification, and currency debasement hedging. What will affect gold in the next year? 1. Interest rates and central bank policies. Further rate cuts or a pause in cuts will directly influence gold prices. Watch upcoming Fed meetings and inflation reports. 2. Inflation trends. Persistent inflation supports gold. Rapid disinflation may cap gains. 3. Geopolitical events. Any escalation in global conflicts or election-related instability will push gold higher. 4. Central bank gold. Accumulation. Continued buying from emerging markets could maintain upward pressure. 5. Dollar strength. A weaker dollar typically drives gold higher. Dollar rebounds could create pullbacks. Scenarios for gold at this level. Bullish case. Gold could break above $3,500, $3,700 per ounce if geopolitical tensions worsen. Central banks continue aggressive buying, and the Fed cuts rates further. Base case. Gold may consolidate in the $3,200 to $3,500 range, supported by steady demand and moderate inflation concerns. Bearish case. If inflation cools rapidly, the dollar strengthens, and tensions ease, gold could retrace to $2,800 to $3,000, providing a buying opportunity. Should you still buy gold now? At $3,434, gold is expensive, but if your investment horizon is long-term risk management, gold can still be valuable. It acts as a hedge against geopolitical shocks. It diversifies against currency and systemic risks. It retains purchasing power over the long run. However, caution is warranted for new investors, as gold's sharp rise could see short-term pullbacks. Alternatives to gold. While gold remains a strong hedge, diversifying your portfolio is wise. Silver. more affordable, often follows gold's trends and benefits from industrial demand. Bitcoin and crypto. Seen as digital gold, offering potential upside, but with higher volatility. Treasury inflation, protected securities. Provide inflation protection while paying interest. Dividend-paying stocks. Companies with strong cash flow and consistent dividends can offset inflation while providing growth. Commodity ETFs. Broader exposure to other inflation-sensitive assets like oil or industrial metals. Real estate. Provides tangible asset backing, income and inflation protection. Gold's surge to $334 per ounce signals investor concern about the global system and faith in gold as a store of value. Over the next year, watch for interest rate cuts, inflation data, and geopolitical headlines to guide your strategy. Are you holding gold at these record levels or looking at alternatives? Share your strategy in the comments below. If you found this analysis useful, like, subscribe, and turn on notifications so you won't miss our next breakdown on global investing trends. Thank you for watching Gold and Shadow, where we explore the light and shadows of global finance.